Good morning, everybody. So that gap did not get filled. We all know that. Where's my? Oh, there we go. All right. And now we've got this. We speculated yesterday about a Bear Island reversal, and there was an attempt to come up there, and sellers came in, knocked it back down. Obviously, everybody knows about the Fed disappointment, so on and so forth. A little gap up here this morning. You can see the hourly chart. Took the cursor off of this side here, but unless it's in there. Anyway, pretty decent gap up into that red bar. We'll see where it goes. Um, into this resistance. You can see the little on the hourly chart. It's a little clearer there, and it's got a void. So, and eventually there's this unfilled gap, which seems like I could hit that today. We'll see. Um, and then this level, down here. Let me put this cursor back. I took it away. I got to click on it for it to come there, but it's not good for while we're talking here. All right, so it stays there. This way we can track it. The 20 MA and an unfilled gap should act like a magnet. Um, we'll see what kind of backing and filling we get here at the open. But the way I look at this, like at anything, even though this is in an uptrend, where would make the most sense to even consider it for a day trade? Because there's nothing here for a swing trade. That's 100%. Maybe it comes down to the second unfilled gap, a swing between the 20 and the 50, the green line somewhere in here, minor support, multiple reference points coming together would make the most sense, where buyers would want to step in and hold the uptrend. So this area here, I have marked this pivot low, is what we refer to as major support. Right, that low area, and you can see there's another pivot here. So it doesn't have to be, an exact point. Now, this would be a deep retracement, no doubt. You don't need to get any protractor out here or trend lines and measuring tool to say, if the move started from here, went sideways, and we talked about these wide trading ranges and versus tight trading ranges typically happening near the end of a move. And we see that beginning to happen now, as volatility picks up and ranges expand after you've had a move going on for a period of time. It typically happens, where prices begin to correct more from there. However, the trend is still up. We'll see how far down this comes. This area here initially, they may step up and hold it a bit, and then, coming down to the 50, you're just going to have more institutions and traders, especially if it comes down fast. The faster it comes down, the better, because just like this went up fast and created a void, coming down fast creates a void. And then if we can get a few days of back and forth, we go back up, and we'll have to assess all of that at the time to see if it's possible, not possible, probable that it regains, or where we go from here. Right now, thing is looking for it to come down, into this area. So if it was to come down here today, so this 409-ish area, that pivot low, if you're day trading, and again, if you're trading futures, you can look at overnight data, but confluence of the day and overnight coming together. But, if this was to fall down here to 410, it would make a lot of sense to then go down to your 5-minute or 2-minute chart and start looking for rejections down there, bottoming tail bars, W bottoms, and so on, to see if it, we get some kind of a day trading bounce from that point. So spiders that were holding up a little better gave it up, came down, wide range bar. And so now we go in factory work, middle of the bar, whatever it's going to do. See where it is. It's right in the middle of the bar here. Where does it open and close? It's opening there, but where's it going to close? Does it close in the lower half or the lower third? If it gets above here, it could get above there, but does it end with a topping tail bar? So one of our tools is called bar by bar analysis. And we take, what is the trend? Is there a signal of a reversal? Yes, breakout inside bar. It's called a breakout bar failure. Move down, breaks support. And now what's the next bar that forms? Is it a narrow range bar? Does it stay in the bottom part of this range? Do we get a 1, 2, 3? Suggesting a move down tomorrow? Does it just, we don't know what it's going to do today. Right now, we see it's up a little bit. Things are coming down a little. And based on this breakout failure, reversal, wide range bar, we believe that this minor support in this 20 MA should be tested in the near term. And we'll see what happens when it gets there. Does it keep going through it like, hot knife through butter, which would be much more bearish? Does it hold? Does it retrace back up? All of that, nobody knows. But what we do know is that this was a strong uptrend. Whatever the news was, it broke out. It looked like it could go higher. Now it doesn't. And we're kind of like in the middle of no man's land as to how deep does this retrace? Does it chop sideways? What's the next bar? Is it a topping tail? What if it opens here and it closes up here, which is highly unlikely, but could it happen? Yeah. But if we were to get a green bar like that, I mean, this is, we all get, and this is what we're talking about here, like what's happening and what might happen and all of that to guide us throughout the trading day. And so if we were to get a bar, say it opens here and it closes like that, which seems unimaginable based on yesterday, but if it happened, it's like, oh, I wasn't expecting that. Now what do you think? And that's the power of bar by bar analysis, not to get you stuck in the past. Right now, it looks improbable that that is what would happen today, but we'll see. So with that being said, SPX, I think the call strike is the one most likely or the highest odds of not being touched. You got an unfilled gap. We know it's opening around here. Would have to, get up there, deal with this resistance, deal with the traders that'll just maybe bought up here, that it just be like, praying for a little rally to dump into. Coming up here into this area could actually be where it begins to roll back over and we get a short, for day trading short, where it would go lower today. So we'll have to assess that as it unfolds. Look at the futures. Well, you can see now a range bar down at the bottom of the range. So that's historically what happens. Now, beginning of the day, we'll see where it goes. We just may be in for one of those kind of painful go nowhere nothing days. It doesn't mean stocks aren't going to, but are going to do that. But when we look at, so let me just, we've got yesterday's support, right? Yesterday's low, obviously. And then we got this one down here. And we want to put the opposite of that on our charts, right? Our reference points of support and resistance. And then we can apply them. And so we just factory work, put this here. What was support becomes resistance, pretty simple stuff. 4,900 on the futures, round number, resistance, maybe something more esoteric lines up there, people connecting dots with trend lines and VWAPs and so on and so forth lines up there. Terrific. You got more people looking at the same thing, so thinking that that's a place to sell, and then we'll just see if a pattern forms there. And then from there, once it gets past, and it probably, when I say probably, right, everything's a probability, just based on the way it came down, probably it doesn't go much further than yesterday's low because it doesn't have the consolidation day. Most times you get the consolidation day and then it follows through. That's the essence of a 1, 2, 3. So if we get that chop through here today. Which I gotta move stuff around here so I can get to what I want. And we just put a line there and apply that everywhere for a reference point, which would put it on my not that I don't see it, but it's helpful to have things like a horizontal line just to make you aware in the middle of the day, things are looking at different things, and you can set an alert on that. You may not be looking at it because you can't see it, but up here, and I just go here and it automatically sets an alert. And so if it comes down there, I might be looking at something else. It's like, okay, is there some kind of a trade setup intraday there? Or what does it actually do there? NASDAQ inside bar, it's already on minus support in the rising 20 MA. And, a little bit more support right there. So probably in for some choppy stuff here. I think that makes sense. Yeah, who's posting? Dan is posting economic reports coming out. So 10 o'clock, there's a bunch of stuff coming out. So that might be where things get moving again. Dow, was it consumer sentiment? And I saw it all before. There's a bunch of stuff at 10 o'clock to be aware of. You don't want to get blindsided by that. The Dow has a whole lot of support. So as far as the short side goes, probably, the S&Ps would be the best since Qs are close to support already. The major disappointment was this pattern falling apart. I mean, we talked about this, this downside shakeout, kind of head and shoulders, call it whatever you want. It was an attempt to go lower and a deep retracement, was setting up as a 1, 2, 3. And in the middle of the day yesterday, and this was like such a reinforcement. Not for me, I've made the mistake more than once, but such a reinforcement, which I pointed out in the green room, was that at one point in the day, this was a bottoming tail bar. And I said, man, if that closes like that, this is going to be a no-brainer. This thing's going to take off tomorrow above here. And as the trading continued, well, at the end of the day, it was a wide range, nasty red bar, which now blows this out of the water as far as a pattern. And so now, the whole thing starts over again as to, where's this going to go from here? Because now it's a mess. I've got this deep retracement. I thought it, based on the pattern, could go higher. It didn't trigger, so no harm done. Now I've got a wide range bar suggesting that it's going to go lower. I got support right here. And I got nothing. It's at a rising 50 MA, so there's nothing here. I'm talking day trades, but as far as this pattern goes on a daily chart, this was an encouraging pattern that prices could have went very nicely higher. Yeah, I see GC. I've been talking about it for quite a while. I'll get to that, but I don't know. It's still maybe not ready, but we shall see. Yeah, I mean, why IWM? You can see there. I got my alert here at the 50 MA. There's an unfilled gap. We'll see what happens there. What happened with the banks, right? That one bank got crushed and some others followed. So, of course, IWM got hit. Yeah, New York Community Bank, whatever it's called, NYCB. So that looks terrible. You can see really bad, really bad. And other banks followed because, it's like when there's one cockroach, there's going to be more. So whatever bad news could be coming in that sector is going to affect the markets. I always look at the biotechs and, they were up and then they got rejected, and you can see this upside shakeout. So in IWM, we were looking for at a downside shakeout. Now, here's the opposite of it. Sideways, up, deep retracement, sideways. That suggests it's going to go lower. And the weekly, which we've been talking about being extended, but the markets refused to do anything until yesterday. We knew the higher risk with, this being extended like that of potentially an M top, which we discussed, yada, yada. And so now it seems pretty clear that things are going to correct further. Interestingly, everything's interesting, right? Why we do this besides money, it's interesting. Interest rates are falling sharply here. Why? Well, the Fed isn't making it easy money, and they're standing tight for now. So this brings more thought to recession. Maybe it's not going to be a soft landing. Who knows? I've been speculating about this, and everybody's been speculating about this soft landing, recession, hard landing, for the last year or so. But look, interest rates go up or down for two reasons: inflation, demand for money, or the lack thereof. So if there's a recession, there's going to be a less demand for money. So interest rates start coming down. Interest rates get attractive to borrow money. The cycle begins to make a turn. So the question here becomes, does this 10-year break below this low significantly? Just breaking below the low a small amount could be good, or, we'll see. I mean, technically, it would be a bottoming pattern, and we'll see where this goes. But, this is coming down. The markets are kind of mixed here. So, we got a little bit of a shakeup that occurred yesterday, and we're going to see how things come together further in the coming days, whether this holds or whether, look, if this breaks through here, it's not going to be, it'll be good intermediate term, but bad in the short term. That's my view on that. And then, of course, we'll see what the dollar does, which is up a little bit. So, that's kind of neutralizing things. And you can see these currencies are down a little bit, but, this is, getting a little bit of a, it's up here, and we had that turn yesterday. So a lot of moving parts. A few other things, and I'll turn it over to Dan. Transports got whacked yesterday. So as we see more indices, moving together in the same direction, in this case down, the probability increases that it's going to continue. Right? Semiconductors, correcting, they led the way up and the way down. Tech, the Magnificent Seven, all of that stuff, gold and getting better looking. Remember the other day it was looking, and I said, hey, this looks like it's starting to make a turn, and then it got collapsed back down. Now it's gapping up. It's at resistance, a little sideways price action here. And I think maybe by next week, we'll see how this holds up here. So we'll keep an eye on that. Silver has been the weaker. It's a mess. And the last thing before I turn it over to Dan, we always look at Bitcoin, which is kind of in between whether it's going to roll over here or whether it does something unexpected. Since the weekly's in an uptrend, does it recover? So there you have it. We'll see what today brings. And we'll go over positions and gappers.
Yesterday into the close, I said I was fully bearish. Just a matter of how it would play out. Factory work, I said, has to stay in the bottom 50%. And there you have it. I think I said 485. I kind of wanted it to hold right there and then bobble around and then maybe do a 60-minute low. So it'd be interesting to see what happens here in the first 30 minutes of whether we stall here or move deeper. All right, I posted a number of call spreads. I looked at a bunch of wide range bar scans. This is one PPG. And I got this all mixed up here, but I posted 3 call spreads. But let's go to earnings, then I'll come back to this list. We did a lot of house cleaning yesterday with our tight trailing stops. Earnings up and down, $5 stock, but that's a short-term high. That's an exhaustion gap right there. Gapping up, wide range bar, topping tail, volume. Now, of course, it could have gapped way up on earnings, but just this in isolation is short-term top. So that's a 30-minute low short idea or call spread. Qualcomm was up yesterday, now down under yesterday's low. So there's another semi that's getting whacked. That's the earnings is what started off the gap down yesterday, and old pal accelerated it. This looks like target minor support to the gap fill somewhere in here. Flex up $1. That's bullish. It's a gap breakout. I'll put that in a window. Oh, we have three things reporting tonight. Apple, and that's the one I said deep retracement here, the major support. Apple, Amazon, and Meta. Three things. Back to earnings. Wolf, 31, no pattern. Met, I don't see any volume, but it's extended on the 15, but no great pattern. Sitva, $5. Wow, that's a pro gap, but too big for me. No pattern. Looks like it's going to grind lower to the 200. Oh, NXT we already looked at a moment ago. Cuervo 104. That's a put spread on a controlled pullback. So my put spread, folks, I'll put that in this window. Oh, look at bottom right here. Etsy. This is not earnings, but that's a pro gap. This was a bearish consolidation and a downtrend, but the gap up is now making it kind of like a triple bottom shock pattern with a void. So this looks fantastic as a gap trade. So I got that bottom right. Let's see how it shapes up in the first 30 minutes. UGI, no pattern. CHRW, another transport. That's a big gap down. Let's see what happens around earnings here. So I will put that in a window. $3 stock, no interest. Aflac. Wow. Insurance has been incredibly strong. That is a nasty gap. Ouch. Ouch. That's ugly. No meeting, no pattern. PTC. No pattern, but look at the volume. Could be a call spread. Boot 77. That's a bullish gap. That's a put spread idea. I'll put that in a window. Sam, is that the one you sold puts on yesterday? I didn't do any earnings trades. ABB, no pattern. Algin, you did? Oh, nice. 302. Yeah, that's a beautiful consolidation after a major breakout, bullish weekly. Yeah, good job. Look, no pattern. Maxell. Is this one of those solar stocks, I think? I was looking at these. I reported some deliveries on EV stocks. And I looked at them and they are just getting killed. No, that's not it. Is it an IO? Yeah, look at an IO. Man, it's a green deal. Green deal is not good for investors. Maxwell Semi, all right, thanks. AXS, that was a beautiful 180 breakout. I can't see where it's gapping. 83 bucks. That's a big old gap down. Let's see what it does. Visto flat. I don't see any pattern. CLB, no gap. We've got to come back to these. Ryan, I don't see any volume, but if it is gapping at 32, then that's a pro gap over all these red bars, 30-minute high. If it is gapping up here, pattern, meow in the animal sector, range bound. He's reported in the morning. Merck's been on a tear. 123, it's gapping over a red bar. It's bullish. Looks, it's extended, but looks higher. Now this would have been a good sell setup if it opened flat. But now $64 with a void. So that's a 30-minute high trade idea. That's bullish, Shell. Honeywell gapping down after a 180 breakout failure, 196, that's bearish. SNY gapping down 48, that's an ADR. So is Race gapping up 3. Wow, that's a big gap. If we think a recession, the economy slowing down, Race is Ferrari. That's amazing strength. But disposable income. Not 250, gap another prior low, but I don't know. I think 30-minute low, it's going to keep going lower. Mo 4050, 30-minute high and put spread, gapping over a red bar with a void on major support. Mo looks good. I'll put that in a window. BDX gapping down. No pattern. Papa Hotel up. Gap's too big for me. TT 259. 30-minute high. Gapping over a red bar. ING down. Another ADR. Tech. Looks like an ADR. RCL. This thing's the cruise ship's been holding up the best. And I noticed our NCLH up alarm actually went off today. I had an alarm at 1840. And I guess it was up courtesy of RCL. Ka 102, bearish gap, call spread idea. WEC flat, no pattern. RCI topping pattern under yesterday's low. Yesterday's low, call spread. Tosco, no pattern. Bravo Romeo. Call spread, yesterday's high. Dove, no pattern. ASX, no pattern. Siri, nope. Ball. Ball. I said Siri and my phone went off. Siri's talking to me. That's funny. That's why I refuse to have one of those talking boxes in your house that's listening to you all the time. Yeah, shop, I moved stop 30-minute low. We stopped out of our put spread yesterday. All right, so this is a bullish gap, ball gapping over red bar. If somebody wants to watch a controlled pullback, Flex was on my gap list, but it's moving too much. So I'm going to put ball in his place. Couple more earnings here. CMS, nothing. SWKS, call spread. You option traders, if you can help me. 96 on the call side. Sierra uniform alarm. I found this today. It was the only one in the 123 scan. Look at Cuervo going here on my long list. So this is an early alarm, but SU, I don't like this unfilled gap, but it's a 123. DGX. I'm it's gapping down 124. The daily hasn't printed it yet. But this could have been setting up a double bottom, but nope, not with that gap down. This is RBTY is a call spread over yesterday's high. Someone wants to look. Gap call spread, TECH, yesterday's high. I mean, I can check these myself, but it'll just totally slow me down. So, option traders, I need help. Now, if this stabilizes right here, then 255 put spread. All right, that's all the earnings. Allergen, yeah, gap's too big for me. Oh, wow, bonds having a big old gap down here. All right, ball. That's a beautiful gapper. I guess, I would be all the F over this if it were gapping like here, 57.70, then 5-minute high, I'd be all over. It's still a bullish gap. It's just a matter of, how much you want to chase and where your stop is. That's all. But it's beautiful daily, weekly, monthly. Hey, look at monthly. Wow, Greg. I think this thing can go to $70. I just hate chasing. But
Gotta give it time.
yeah,
It ain't
yeah.
going, it ain't
Right, right.
gonna, those things chop around usually for a week or two, like the ALGN, but they typically go higher.
Oh, that's a beauty. Yeah. NCLH up alarm. Nice. ZTS alarm. Sam, I think. Oh, no, this was. Wait, why did I have an alarm on this? I guess it's still set up. No, but it's also a call spread candidate. Let me look. 15 DTE. Nope, that would be over earnings.
Abbott Labs, cell setup, ABT, daily.
Yeah, totally. Here, I gotta post Doku first. I mean, Adobe. Hold on. Yeah.
Ooh, he was already big spike up and oh,
Um, all right, thanks, Paul.